Officially, good morning. Welcome, everyone, to Market Watch Group's Sunday Market Insights favorite day. The chimp is in the cage asleep. We're all 2 days away from the last taste of risk, a day before our next taste of risk. We're just kind of feeling pretty good about being able to be logical, rational, pragmatic, to really see this the way we need to see it in order to trade the right way, not get sucked into bear traps, bull traps, not over trading, yada, yada. Okay. Again, my name is Scott Beck. For those of you who are new or newish, let's get cracking. As always, what we do is for education, illustrative purposes only. Nothing we do or say should be construed as a recommendation to buy or sell any financial security or product, because we're not brokers. We're not advisors. We're just speculators. Speculators / best friends. Let's go. Agenda, market posture. We'll score it. We'll talk about the score. Let's talk about specific marks that we want to see that will open up to say, hey, I can go a little more aggressive. Let's get it right. Or, dial back, possibly hedge. We'll look at the economic calendar. We just got through the employment week. Mixed bag. Jobs for non-farm payrolls had a little bit of a bump, but certainly everyone was very, very nervous about the GDP number and the contraction that we've seen in economic output. Let me get a couple more people in. We will definitely do some watch list maintenance. So we've started to do that. If you download the watch list from the group right now, it's going to be a little bit bloated with things that we're starting to get rid of. I don't know. Give me one more week before downloading a new one. We're going to start doing some searching this week. So Tuesday, Thursday in the working sessions, especially in the open sessions that I'm going to do in the second half, I want to start to go through all 5 of our growth sectors. We'll go through financials. We'll go through consumer discretionary, technology, industrials, communication services. Good morning, Bob Walker. Good to see you. And we will start to find new peripherals. So obviously we have our core foundational leaders that we like to keep an eye on at any given time. And then the peripherals where we start to see the institutions like, hey, look at this new stock that we like. Shiny new thing. Great. Let's put it on our list. As long as it has the liquidity that we're looking for, absolutely. So definitely looking at our watch list. Trading plan section of the week. So 2 things are happening right now along those lines. If you're new, we're on section 8 out of 8. So we're about to start the loop. We do an 8-week loop. So if you're anywhere in the last couple of weeks new, we're about to hit week 1. Great time to just get roll up your sleeves, and we're going to build a beautiful trading plan, right? 8 sections. You can go download a copy of the template and get ready for that. The second thing that's going on, and if you're not just new to the group, but new to trading overall, Glenn and I are in the process of working on a second loop. The 8-week loop is great, but it's 8 weeks. You know, I get it. I feel the impatience myself. I'm like, 8 weeks. I mean, it's when you think about what you're doing, 8 weeks is fine, but if you're wanting to feel more comfortable right now, what we're thinking about is a smaller version of what we'll call the beginner's blueprint. That's a 4-week loop that we just sort of hit the most, like, you need this. If you're going to place a trade, even on paper, what do you have to have? Well, you don't have to have this entire 10 to 12 page document before you do that. As you trade, you're building that document. So it's kind of the chicken egg, heart before the horse, kind of heart before the horse, I'm going to think. Cart before the horse, kind of a thing. So you have to have something to start with, some risk management, some rules, a little bit of understanding of psychology, but you're not going to have this great comprehensive thing. And so that's what we're working towards, is that you have these 2 things you're able to work on simultaneously. So we're very excited about that. Let's get going. Let's start here. Now, if you are new, I'm just going to take 1 second. 1 second to pop over here in the group. You can see here I am in group downloads. It's on the left-hand side. Good morning, John Z. Tony Z and John Z, both here. Love it. If you scroll all the way down here, right, you have your trade alerts. Very important. Come down. You have your new members tour. Give you a good way to use this. Suggestions, chat. Love those. This is where our meetings are. Alerts and resources here. Recordings and then downloads. Here's where you download your trading plan. Here's where you can download a fully developed trading plan so you can say, hey, what does it look like? What am I working towards? Get some head start. Market posture log. I probably need to update. No, that's a blank one, so that one's fine. The historical, I believe, was updated not too long ago. Let's see. Okay, it's not too far off. March 16th. I need to come in here, so I'll come in here and update that. So if you want to go back, and you want to go back and be like, what is the history of this thing for the group? There it is. You can go back and see, how does it look at different times? When does it get better? When does it get worse? It's a great way to learn a little bit about that. And you can get the logs, the watch list, the posture, the top 10 mistakes. Just a great ability for you to get up to speed. Remember also there's a number of recordings. So what we're about to do now might be a little bit confusing. Go watch the videos and you'll be like, oh, I see what he's doing. That makes sense. Great. I feel like I'm up to speed now. So with that in mind, let's get into it. All right. Did anybody score theirs? I bet Stephen D did. I don't know why my chart's actually not working. Let's see if something... There we go. Let me orient my panels smaller. And let's start back a click. What is the red line, you might be wondering? That's 20% from the high. That's a bear mark. So technically, in my opinion, we hit a bear market. Other people are like, we didn't quite. Okay. I mean, I'm fluid to where I'm like, look, I'm not going to be like, it was a bear market for 3 minutes. No, it touched it. But when you see the point at which it touched it, I agree. That wasn't. I'm not dogmatic in my definitions. So if something is like 9.7%, people are like, a correction's 10. I'm like, that's a correction. I don't care if it didn't hit 10. It's a correction. There's no difference in like whether we call it that or not, but we should trade as if that was a correction. We should trade as if we hit a bear market. Why? Well, because we have yet to see a higher low. We've seen a V, granted, on this weekly, right? We've seen a V, and we talked about the fact that when it bottoms, that's likely how it's going to bottom. That's exactly what we described. This V here. But does this V mean it's over yet? No, not necessarily. I mean, it could be a W where we come all the way back down. And then we start to see what comes out of this thing. Certainly, it could be the end. And we come down here and we think, oh, look at that. It's hard to call this a head and shoulders because that would be the other shoulder. The speed at which this fell. But a higher low is a higher low. So something along those lines, certainly I'm like, hell yeah, that's exactly what I'm looking for on the long-term chart. That looks for stability. What do we have right now to score? Nothing. We scored when it broke and it took out some lows. We dropped a 0.5 point. The next week, it actually tested lower but finished higher, and we did not score that. So no score there. The next week on this red candle, it opened higher, finished about the same place, no score. Opened lower, finished higher, no score. This time was the first time it was like maybe, But what are you scoring? It's not a higher high, right? The last didn't get even back up to here yet. Got to the bottom of this old trend line right here, but the bottom of it. No, I mean, right? So for me, I don't see anything that would make me be like, we should give it a quarter of a point. Look what happened. It did V, but all the V is doing is getting it almost back to where it was. It's not enough yet. Anyone disagree? So as I look at this, my score, oh, that's the wrong thing. My score, 0.25. Yeah. 0.25 makes sense. I scored the momentum and that it broke the line. So you did score it. See, that's to me, that's not enough break. That's not enough for me. I get what you're saying, and I'm not surprised, Steven, at all. Great. I mean, I love your perspective. I think that brings balance to what we do. So I appreciate that. I'm not going to lie. I expected it. Great. I'll see. I'm anxious to see where you finish up when we're all done here. But for me, right, I mean, it's hard because you're like, well, look what this has done. But remember that the start of that was the lowest point. The lowest point. And so for me, I think let's just kind of go like this. And now it's not as big of a move up, right? When you're just like, okay, maybe if we get a higher low, I can score that to a 0.5. And if we break this, then all of a sudden we're a 0.75. And if we get back into this red, so I'm going to walk you through mine. That's 0.25 there, higher low. Then when we break this high, 0.25 there. And then when we get into this red line, 0.25 there. When you add that up, that's what it has to take for me to get back to a 1. A 1. And a 1 is actually what this red line was way back here in 2023. If you're wondering where this red line comes from, it comes from back here. That's the first time we saw a new trend, uptrend, develop coming out of the bear market of 2022. Interesting, right? 2025, like all of that's coming back into play now. So that's early 2023 trend. When we scored it there, it's a 1. So for me, I feel like this is perfect. That's exactly what it would take for this to get me back in to a 1. If anybody was just sitting in the waiting room for a minute, my sincere apologies. It's supposed to ding me, and it's not dinging very loud. Let me turn it up a little more. I thought I had it set so that it lets you in. But anyways, if you sat there for a second, I'm very, very sorry. Or more than a second, then I'm even more sorry than that. Thoughts on that? So that's what it's going to take for me to raise my score back up to a 1. I mean, how long will that take? Well, this is out in August. It's going to take a little bit of time. There it is. I will keep my score the same. Let's go look at the short-term score. Now I'm a little bit more hopeful on the short-term score. I agree. There's momentum worth scoring there. So let's just isolate 1, 2, 3, 4, 5 days. So this is where we were. And if you remember, let me change the color so we can see it a little better. This line was an impediment back here a week ago. We're like, well, we did have a higher high, we had a higher low, so we did score that. And if you go look, our score went from a minus 0.25 to a 0. But that was it. We said in order to go higher than that, what do we need to see? We need to see, we need to see What does a score of a 1 mean? Great question. Now, that's where, and if you go watch the videos, and if you look in our up in here, each one of these has a number in parentheses. 2, 3, 1, 1, 1, 2. Total of 10. Every score is empirical, meaning it goes from a -2 to a +2. So it's not 0 to 2. It's, if you're bearish, you're a -2. So if you think about it this way, what is the absolute best long-term trend you can imagine? That's a 2. Tends to be a little north of 45 degrees. What's the worst you can imagine? That's a -2. I'm reluctant to score at the very extremes, although we've seen it. But I'm always a little reluctant because it's like, well, is that the best you've ever seen? Because what if it gets better? You can't score it better. Anyway, philosophical discussions that go back and forth. So what does that mean? It means that we want to make sure that we capture the essence of the analysis and that the score gets us to a place that says, do we understand that component of the market so we can put it all together? So that's where we end up. You can see we're a little bit underwater. We're in the negatives. Not good. Not good. Go back and look at our history and you can see kind of what does our score look like. We're like, hey, you know what? It was pretty good back in October, November, December. I wonder how these guys scored it. You can go see, oh, yeah, okay, that makes sense. They scored it pretty well. I'd be aggressive. I'd be taking more risk, more trades. Great question. Okay, so I'm a 0 now. Did we get enough? Yes. Definitely. Yeah. I'm gonna give it a plus 0.25 right here. Well done, buyers. Chip, chip, cheerio. What did they do? They broke that resistance. You might be thinking, well, Scott, there's no volume. Whoa, whoa, whoa. Who said anything about volume? Volume's next. We don't blur lines. We don't let one analysis bleed into the other analysis. This is just short-term trend. And we recognize we don't really have a trend to score, right? Although, you can kind of see like you're starting to see something come through here where it's like, if this thing pulls back and turns and catches it, I might be like, hey, you know what? I've now got what? What do I need? I need points. There's a point. I need it to hit a high, come back down. There's a point. There's a point. There's a point. I need 2 points at least. When I have these points, then I can all of a sudden move back to scoring the trend. We haven't had points like that to score for a little while, so we've just been giving quarter point here, minus quarter point there, and we're going to give it one. It's like, yeah, it broke the highs. Great. It broke the resistance line. Do we give it a higher high? Do we give it a half of a point? That's the question I'm thinking to myself. Is it worth a half or only a quarter? So it does get a quarter for breaking that. That's a pretty big line. That's why I'm kind of feeling like, hey, that had a touch and a touch and a touch, and it was sitting at it. How impactful do we consider that? That's the question. Definitely at least a quarter of a point. And I'm wondering if I even want to give it a little bit more than that and go a half. I'm going to mark this yellow for a second. We're going to come back. Up 0.25. It has you at 0 now. Okay, I'm definitely up at least 0.25. So it was a 0.3, a half for LJGO. It was a 0.325 on 328. Let me go reference where we were on 328. 328, we were here. And we were a 0.25. That's about where we are now. Okay, I see what you're equating to. That's a good observation to hold on. I think that's what you're saying is, hey, it seems fine. Yes. That if we can break back above that, then we can move back. Okay. I love the discussion. I mean, at the end of the day, if we go back and forth this quarter of a point, you're not going to see a fundamental difference in how you score the market from your fellow attendees or myself. But it does, I think, have us thinking about the right things. Okay, I'm going to leave it for now at a quarter. We'll come back. Volume should be pretty easy. Let's go take a look at volume. Quick question. Is exponential moving average an acceptable study to add? Can't find SMA on TradeStation. 100%. It's not going to be super different. It's not going to be very different at all. Minimally different. At the end, if we have time, I'll throw one on just to show you real fast. Yeah, it's funny because I've played with 20s and 50s, and I've played with EMAs and SMAs. At the end of the day, you just kind of settle on what you like, but there's not going to be where it's going to fundamentally change things significantly. It might alter a decision here or there by a period of time. Yeah, good question. God, it's such a great day today of discussions. Dropping down to 1 month now. I've got way too much extra space out here, so I'm going to take this back to 7. I've got 1 month. You can see at this point, we're getting to stale. It's stale. That big chunk that we've been riding, remember when we first got it? We had this chunk and we're like, oh man, we're going to have this volume. It's just going to sit here for weeks and weeks. And all of a sudden it's about to be gone. Let's flag, first of all, what happened to our sanity check. In this period of time, this is our sanity check. So a 0, absolutely. If our volume score eked positive today, what would eke it positive? So if you notice here, I've got sell, tie, sell, buy, sell. 3 sells, 1 buy, 1 tie. That would still orient more towards a minus 0.25. But we all know that my tendency is to kind of throw out. And even if I only throw out a little bit of it, I would be like, let's throw out this part right here. Let's just throw out those 3 days will be gone by the middle of the week. Boom, boom, boom. What are we left with if we do that? We're left with 1, 1, and 0. That's a tie. Tie goes to the buyers. Tie goes to the buyers. And you might be thinking, why, Scott? My answer is because I said so. No, that's not why. Because there is an inherent bias on sell days and bigger volume days. And so because of that expectation, we orient our analysis to give it a little bit more equilibrium, right? To level the playing field so that when we see a tie, we're like, a tie is actually a little bit more in favor of the buyers. And when the buyers are pushing, that's even stronger still. So now, if all of a sudden this week we get a couple of volumes that are bullish, boom, boom, we're half a point right. Those when we're transitioning out of a negative score, our expectation is volume is a leader. Let me say that again. When we're transitioning out of a negative score, and it's the same if we're transitioning out of a positive score. If we're ever in a situation where we're at a high score and we see volume on a transition, we're like, that's super concerning. Whereas right now, if all of a sudden our volume jumped to a 0.5, that would be one of the earliest bull components. These are just holding it neutral, negative, 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 right? So if we see that volume shift tends to lead price, right? So anyway, but I'm going to go ahead and move mine to a 0.25. Now here's the interesting thing. That tie is going to hold. So we'll stay at a 0.25 until we see the next chunk of volume. And if we get a chunk that's a selling day, that'll bring it back to a 0. So if the sellers come back in, we dial back a little bit. And if the buyers come in, we start to increase the strength. And that's the kind of thing that we think would then move us towards a positive score again. So questions, comments, or concerns? Yeah. All right. So we're a half a point gained. I thought we might end up somewhere around a -1, so a good recovery, but not like. I mean, it's good. We're from a minus 2.5 to now maybe a -1, maybe even a little better. So it's like good, but not like, oh yeah, we're convinced the buyers have regained. Still a bit iffy. We'll see. Let's move on to major market analysis. Major market. Everything that you see me looking at here, the economic calendar, what I'm about to move to now, which is this major market analysis, everything is linked. So if you go to our group and you scroll down, there's either a link section or there's links on the left-hand side. You can find all of it. It's all quick and easy at your fingertips. What are we doing here? We're setting everything 9 months ago to a 0 point. We're saying, what's happening now? And you'll notice all of a sudden the leader is the S&P. Interesting. Typically, we expect the S&P to be the watermark, somewhere in a second position because it's the broadest. But right now, it's actually moved to a leader. Who else is there? The Dow. Just behind them is the NASDAQ, who's way down in a lagging position. The Russell. Small caps are really struggling right now. Right now. If we see that momentum shift and we can see it shift quickly, that might change our perspective. So how are we going to end up seeing that? We're going to change the time frame. Now we're setting our 0 point 6 months back. And what's going on? Interestingly, it's kind of a tie over here. And so, the NASDAQ technology, which in a bull market we would expect to lead, but we haven't seen it lead. It's not lagging, but it's not leading. The Russell is definitely lagging. Am I all the way? I am. Thank you, Steven. Steven just gave me a quick pointer. He said, make sure you're all the way. What does that mean? Sometimes when this loads, it can be like this, and you don't notice it, but there's a little gap down here. And if you move, you're like, wait, this isn't all the way over, and then it might change, actually. It's a very visual analysis, this analysis. So anyways, make sure your date, if you look up here at the top right, that should be Friday date, May 2nd. That's another way you can verify. Good tip. 66. If you're brand new and you're drinking from the fire hose, just, lean back and enjoy it. No, I'm just kidding. It's a lot. It is. Now, what do we have going on here? This is another interesting perspective where the S&P is on top, followed by the Dow, followed by the NASDAQ, followed by the Russell. The Russell's lagging, the NASDAQ's lagging. There's a little bit of recovery. I know that we want to see when it comes to scoring, this still looks negative. The trend is down. The NASDAQ and the small caps are lagging. Yeah, I nothing here. Nothing here. So I'm going to score mine exactly the same, -0.5. Did anybody change theirs? Then I'm going to go up to the 22 days. Now, if at the 66, which is 3 months, if we were there and we're like, you know what, I just don't know. I kind of might score it better. A tie, we go to the 22 day. Now, we don't have a tie. So the 22 day is just sort of a, hey, looking ahead, is there anything interesting? Yes. Yes, there is. What is it? It's the NASDAQ shooting back to the leading position on the 22 day. That's not enough to score it, right? It's not enough to score it, but it's enough to give us that little Panasonic dog reaction where we kind of cock our head to the side like, huh? What? What's going on? This looks interesting. And so, yeah, I look at this and I think maybe something's brewing that we might score soon, that might start to ease us back to a 0. For me, it hasn't done it yet. I would love to hear if anyone has a different perspective. Steven's asking if I'll go back to the 133. Certainly. 133. Yes. It's an interesting one because it's a conglomerate here. The NASDAQ was in second place. Yeah. I mean, that's not really meaningful for me yet. You can see that the difference between them is negligible. This was just more kind of a like, okay, everyone's trying. Yeah, I mean, if it's going to show up, it's going to show up here, which it hasn't. And then we have, of course, 22 days. That's and even, whoops, am I not all the way? See, there you go, not all the way. Oh, no, I am. There we go. When you're all the way, yeah, this is good. I think this is the first sign of it. We'll see if it gets more. But for me, I'm sticking with a, oh, wait a second. I thought I was a minus 0.5. No, you're right. Yeah, that's enough. That's enough to start easing this back towards a minus 0.5. I would give that I thought I was at a minus 0.5. It's not enough to jump me. It's not enough to jump me to a minus 0.5. But it is a better look. I agree. Sorry, I should have oriented myself better. I thought I saw a minus 0.5 and I was like, minus 0.5 is pretty reasonable for that. Yeah, I'm a minus 0.75. And if it looks the same, I'd ease it to a minus 0.5 even next week. It's like, as long as it sort of holds this, like, hey, it's looking better, let's see what happens. That does look better, right? It doesn't, that's showing more stability out of the NASDAQ. We're not seeing stability out of the Russell yet, but we don't need that. We can have a full bull market without the Russell participating. That's just small caps. To have a strong bull market, we need the small caps. But technology can carry it fine by itself. Doesn't need it. That's Batman without Robin. He'll be fine. Okay, sector rotation. Got to start to hurry now. I felt like I was on a good pace. Let's go do sectors. This is important because we want to see where we think money flow is. On the 200, what do we have? Utilities at the top. That's defensive. Then we have financials and comm services. Drop down. Then we have industrials, staples, and discretionary. This thing's a mess. This is a mess. It's all over the place. Hard to get a good read here. We're at a minus 0.5 on this one. Okay, so let's go down. Who's at the top here? Now this is growth. This is growth. This is comm services. This is financials. This is, and then it's staples, and then it's utilities. Looks okay, right? As of right now. But when we score it, this is what's most important. The 3-month. And this will show you why we're negative. Because that basis that we had with the 9 and the 6, we know that the negativity has been in the last 6 weeks, right? This chunk here, when you lose a higher starting point, you're like, wait a second. What stands out now? Staples and utilities by a far cry. That's defensive still. What do we see developing? Hey, look at this. Industrials starting. Financials starting. Technology. I don't feel like it's a tie, but I feel like this. If we go to the 22 and we see a strong jump from bullish sectors I'm thinking I might go ahead and give it a 1/4 point. Thoughts? So it's not a tie. If it was a tie, it would only need a little bit extra. But here it needs kind of a lot. So let's see what it does when we go to the 22. I have no idea. I didn't look. Oh, okay. Now, what do we see? We see technology at the top. And then we see industrials at the top. Comm services. I don't know. Is that strong enough? Strong earnings for the Big Seven, Bob Walker says. Okay, let's give technology. We're gonna give it like it's a buy now, pay later kind of a thing, right? They gave a little bit of a little money down. We're going to give them the minus 0.25. We're going to raise it up a little bit. Technology, you did a little. We need to see more, though, to hold on to it. Does that feel fair? That makes a pretty good jump, actually. And let's finish with the VIX. Yeah, I'm going to leave this as is. I felt like that was a pretty generous sector pop. Let's go to the VIX. I think the VIX is getting something here too. Let's go see. Let's move this back to 6 months. And let's go to the VIX. 1, 2, 3, 4, 5. Where's my drawing tools? 1, 2, 3, 4. 3, 4, 5. Okay. Yeah, we did kind of break down. We didn't break this low, so that's not taken out yet. We're at the old low here. But we already scored breaking that low. Did we do anything new? We already scored this as a lower low. Break the low, 1/4 point, lower low, 1/4 point. And last time, what did we give it? A 1/2 point increase. We gave it a 1/2 point increase already. Did something occur? Yeah, Steven, I agree. We ended up at 24.88. Now we're at 22.68. We're 2 points lower. Just a little meander down. I don't think it did either. I think that I'm going to leave that alone. Because we've come from 60, it looks great. But 22, still carrying a little bit of institutional concern is the way I would put that. Okay, I'm going to leave mine alone. That puts me, okay, yeah. I thought we might be at a -1 to a 1 point improvement. That's pretty good. We improved a 3/4 point the week before and 1 point this week. That moves us closer to this little, where was it? This little echelon here when we were sitting closer to that 0 mark. We're getting closer to that point again. One more good week would be good. That'd put us into neutral. Neutral's a good place to trade bullishly from. And you might be thinking, wait, what? Wouldn't you want to be bullish to trade bullishly? No. We trade more than the score. We trade the momentum. We trade the triggers and the setups. So the score certainly gives us an orientation of things like how many trades, how much risk, how tight should my stops be, how many do I want to scale out of when I get to my first target, how tight should I move my stop, how likely am I to carry through a weekend. Those questions we shouldn't be like having to ask and answer every single day. That should be derived from the posture where we have a good sense of overall market conditions. Yeah, so this feels pretty good. Let's go to the watch list. Thought it was a dead duck. Now it's limping along. Buyers are cautious, moving slowly. Agreed. Year-to-date average 1.65. Okay, there you go. Love it. Love it. All right. Yeah, I bet the 2024 has got to be an average for the year of like 4.5, maybe for the entire year. I don't know. 2024, 573 for the 2024. That was a great year. God, I miss 2024 now. Yeah, yeah. Makes perfect sense. Makes perfect sense. All right, let's look at the watch list. Let's look at the watch list. Apple. Apple's on my list. For sure. We're well off the lows. We already had this higher low recovery. It wasn't much of a higher high, but it was a little higher high. And that's enough of a move that if we pull back and we find support in this area here, that move happening again, that puts me up here, right? Up near, whoops, that's a little high at the end, up near there. There you go, right? I'm definitely looking for it. That gap right there is not that concerning to me, especially if that volume decreases as it comes into this support level. Love to see if it increased out of it, right? That would be perfect. Perfect. AbbVie, there's nothing there for us yet. It's well overbought, well extended at this point. I mean, you know, that party's. Could it keep going? Of course it could. But is there a trade for us? The question is not, could that keep going higher? That's not the question. I don't care. The question is there a trade for me here where I would have an expectation of its probability going higher, providing me enough reward to justify where I would have to put my stop loss to contain the risk? The answer is unequivocally, of course not, right? No, I think that thing could end at any given time, and I'd have to have like a 15-point stop minimum right now. So it's like, yeah, there's nothing there. Looks great. There's a lot of momentum. That doesn't make it tradable. Amazon, nothing. If Amazon were to pull back and turn, well, that's a whole different story, right? That's the kind of thing that we're going to be looking for coming out of this. As we say, hey, these buyers look cautious. What are they doing? Are they maybe wanting to buy somewhere? Oh, maybe. Let's see. Let's see. Bank of America looks great. Needs a pullback. Caterpillar looks great. Needs a pullback. Sienna looks great. Guess what? Needs a pullback. CLS, that was actually arguable. There was a pullback. That's the pullback. That's the turn. Again, gaining comfort, entering on red candles, and then you can see what's happening here. That could possibly be a continuation trade. That might be something that we look into as a continuation trade. It's overextended, looking for a pullback. CNP overextended, Cisco overextended. Remember when I said, hey, when it comes to these kinds of moves, we have to be ready to buy early, even when it feels like it's not ready, because if it works and it V's, when you get to a certain point, you're either in or you're watching, and you're thinking, wish I was in this. Duke, I closed. I tried here. Nothing. Great. What was the loss? Like less than 20% of max are willing. Great. That's a great trade. I had a 2.5 to 1. I lost 0.2. No harm, no foul. Where would I get in on a V formation? Well, I mean, the fact is there's times in the market when we're going to try to get in right there. We're going to say, look, now how much would you get in? That's where we're like, hey, it's only one or two things, because at that point, oftentimes in a V, it's a bit of a it's a bit of a shit show, to be fair, right? Like things are selling, it's pretty nasty, and you're like, hey, this might be the bottom. We better put one or two things on. I mean, it feels like you're just hanging on to the bull a little bit in those situations, right? It's not like we're like aggressively like, yeah, we've decided we think this is a V and we're going to, we don't do that. We're all kind of like, oh, this feels crazy, but if you're going to do it, now's the time. Otherwise, spectate. Now, if you spectated and you had been spectating so that you didn't lose on the way down, you're not as concerned about not gaining on the way up. But a lot of speculators I know, including myself, I want to try to catch. I know there's a lot of powder in the keg when we first come out of these things, right? So that's the point. Miguel says it's a great example looking back. Yeah, looking back. It's very different than when you are in the jungle and it's nasty and it's like, right? You're like, woo, do I get in this? That's very different. We recognize that and we just kind of say, yeah, look, if we're going to do it, it's now. If you're going to do it, it could be a little bit of a ride. You better be prepared. If you don't have the stomach for it, take a pass. It's like when I go with my daughter to the amusement park. I wait with her in line. We get to the front. I walk through. She gets on the roller coaster and I wait for her to come off. It's perfect. I don't ride those things. They make me sick. Okay. ENB. Overextended Fastenal. Actually, we saw this. I kind of feel like I should have, but what the problem with this one was the vol. I don't like that big old whipsaw thing. Now we kind of are moving into, and you're like, oh, that's being picky. Well, we're picky when the market's -2. We're less picky as it gets better, but certainly we're picky. That we could think about one of these on a possible continuation trade. I don't know that we've done many of those, but I'm thinking there may be an opportunity for an alert on that this week. Am I going to run out of time? I feel like I'm doing okay here. Flex, too close to earnings. Fox, nothing there yet. GE Vernova, got to wait for a pullback. Gold, we had a trade set up, never triggered. Google, that's viable, actually. If someone's like, I mean, what do you have here? Up, down, higher, low. We wouldn't take that because of earnings. But that one, that's viable. We'll see what it looks like. Maybe we'll put the alert on that if we can catch the entry in here on a pullback, it may still be good. So, yeah, let's flag that. There's definitely some good ones in here setting up. I'm going to put an asterisk next to Google. Communication Services has seen some strength, right? So that's the kind of thing that we're looking for here. Goldman, overextended. Robinhood. Ooh, Robinhood. Maybe this thing is kind of in here trying to figure it out as this comes down. I'll put Hood on my list of things to consider. We loved Howmet. Unfortunately, way overextended at this point. IBIT, that's Bitcoin, a little bit overextended there as well. IBM. I like IBM again. Needs a pullback. ICE, overextended. IWM. Okay, small caps, trying to figure it out. No to KMB. KMB's off the island. I should have been pulling some other things off too, but I haven't seen anything terrible. Coke. Coke's looking defensive and maybe potentially setting up. Kroger. MasterCard overextended. Meta overextended, but they had good earnings. That helped support the Google trade. Morgan Stanley overextended. Oh, look at that on Microsoft. Again, technology looking in a good place with what we're seeing here. Netflix overextended. NVIDIA. NVIDIA gave you another chance to get out at 115. I took the rest of mine at 115. So anyone else riding this one further? I didn't like the doji at resistance on declining volume on a Friday. So you had a good opportunity to catch 115 as a target. This was the primary target, but my thought is it's probably going to have to come back and reload, and then maybe it gets there and a little further. But okay, good trade. Good trade. Done. Out. Great. Anyone in that one still? Did you take it? Talk to me, people. PLTR. PLTR I carried. I want not a lot of it. Not a lot of it. One last piece. You can see we're almost back up. We'll see. I got rid of most of it. It hit the target at 125, but with that volume, I thought there may be one more little piece before. One more little piece. PM, overextended, QQQ, overextended, Roblox. Woo. Reddit. Reddit's on my list. I like Reddit. I think Reddit's a sneaky little guy trying to pull into a viable position here. I have aftermarket for PLTR. Is that not right? Tomorrow. Yeah. Earnings tomorrow night. Yeah. You had me panicked for a second. I'm like, whoa, did I miss the date? We'll see. I might give some back. It's only a little piece I have. I've booked most of the game. 80% of the game. Where was I? SE, strong but needs a pullback. Southern, no. SPY. Southern, I'm getting rid of. If I'm going to trade anything, it's Duke, and I don't really want to watch utilities at this point. TJX. We saw this one back here where we're like, hey, that's valid. Getting out tomorrow. Yep, I'm looking at tomorrow as well on PLTR. Toast, nothing. TPR, nothing. Tesla. Oh, Tesla. We'll see what it does. TSM back in favor, but NVIDIA and PLTR are my favorites. Twilio, Visa, Walmart, still carrying it. Anyone else? Got the first piece? Yes. Amazing. Where are you, Walmart? Now, I took, if you remember, I actually moved my target to 99. So I did pull half at 99. I pulled half at 99 instead of 99.5, which actually got me to my target on Thursday night. We talked about it, and I said, you know what? I feel like 99's easier, and I want to get a piece off on Friday. And it did not get to 99.5, but it did get to 99. So my secondary target, I moved as well. 105.5 is above the old high. I actually put mine down here around 104.75. Like, where did we hit a couple of times? And then I'll move my stop along the way. So that one I'm still carrying a good chunk of. Half of that, 20% PLTR. Nothing of NVIDIA, nothing of Duke. Looking for some setups. We've got some setups. Possibly pullback bounce setups. Possibly continuation setups. So we've got decent momentum from last week. We'd love to see it continue into this week. Real quickly, let's look at the economic calendar and then the trading plan. So I'm going to only take a couple of extra minutes from you today. What do we have? It's a pretty light week, if I remember correctly. It's the Fed, which a list of past. Oh, the alerts. I let me see if I can't put that together to look at like previous ones, John. And post it. Yeah. Okay. Kami, good to see you. See you tomorrow morning. We have nothing Monday, deficit Tuesday. That'll be interesting to see what people talk about with that. I don't think it's important by any stretch. Wednesday, of course, is a big one just simply because we want to see what the Fed is going to say. No one has any expectations about cuts. Thursday, jobless claims expected to drop back to 230. Let's see if it does that or if it gets closer to 250. And then Friday's a bunch of Fed speak. Michael Barr, nah, we don't care. John Williams, we don't care. Adriana Kugler, I like her. It's a good name. It's a good, strong name. Adriana Kugler. It's no Austin Goolsby. There can only be one Austin Goolsby. Tom Barkin, nobody cares. Christopher Waller, John Williams, nobody cares. Lisa Cook, nobody cares. Alberto Musalem. Yep. Alberto, we care for sure. Musalem. I like him. Beth Hammock, nope. Nope. Sorry. It's all about the name. Okay. Lastly, setting trading goals. That's an important part of your trading plan. I don't have it up. Trading goals. Goals should be oriented around what? Weaknesses. So when you go through your first section of your trading plan, you've identified weaknesses. Great. Set a goal to make a weakness either mitigated. You don't have to turn it to a strength. Just make sure it's not impacting your trading. Weaknesses come from the trading plan itself. Goals from the trading plan itself. So missing sections, weak sections, whatever you need to do to strengthen your trading plan, set a goal around that. Trading goals come from record keeping and analytics. First of all, setting goals to have those things. And then once you have them, analyzing them to create data-driven goals of I want to make my losses smaller, I want my gains bigger, I want to be right more often, I want it right, whatever that might be. Goals, so important. Goals are how we translate all that beautiful record keeping and analytics into our improved process. That is the bridge to Kaizen, right? Constant improvement. Okay. 3 minutes extra. Any questions? Everyone feeling all right? Markets got a little bit of an uptick, some improvement, but there's still some concerns, so we'll trade it as such. We've got a couple of things on, a couple of things we're looking at. Makes sense from a risk standpoint. How is the puppy? Growing like crazy. She's up to 41 pounds now. She's about 4.5 months old. So cute. Puppies are the cutest. Anyways, thanks for asking. Good to see everybody. I'll see you in the morning, 9:15 a.m. Eastern. As always, happy trading.
Recording stop.